Welcome back to another episode of Charting with your boy. You heard? All right, check this out. Today, we're going to go on to part two. It's a very important part when it comes to trading, investing, even in life. This is the part where I like to talk about money management and risk management. All right? What's good? It's your man, Aaron. I want to say thank you for tuning in to my channel. Do me a favor, hit that subscribe button. Go jump to it. All right, the chart I got up. This is the chart I've been trading for the last 3 weeks or so. Yeah, is it New Zealand dollar, Japanese yen? I think this is a good example of talking about risk management. 1 hour, right? Not just risk management, but money management as well. You see, when we scroll back, so everything in this green box is what I've been trading. Actually, let me go back up to the data real quick to show you what my intentions are in this trade, right? Well, there we go. Boom. All right. A couple weeks ago, I saw this setup. It's in one of the previous videos. And in my group, they saw it as well. So I saw the setup, and the goal is to play it down to the downside, as annotated by annotated by this green box here. That was the very first original trade that I took with intentions of riding all the way down to the bottom, from here to here, right? So go to the 4 hour real quick. So I got in on that first trade, right? The intention was to come down here. I got stopped out, and price came back up around here somewhere, in here, like right up in here. I got stopped out. I'm saying this because when I say I got stopped out, that means I ended the trade, but I ended the trade in profit because price came back and took me out, but it was in profit. But before I got stopped out, when price reached 101, I partialed out 90% of my trade. Partialing out means I closed a large amount of my position so I can liquidate, so I can take money off the table, so I can cash out, have money for that day from that one trade, right? So I made money, I lost the trade, I made more money, right? So this is all part of your money management plan and risk management when it comes to trading, investing, or anything. You have to have this plan in place. Like one of my mentors says, if you don't know where your money is coming from, how can you make money? All right? There are 2 ways you can do your risk management in trading or money management. I'm gonna keep it like that, right? So you have your initial account deposit. That's the first step. Number 1, don't trade or don't invest money you can't afford to lose. So if you don't have enough money sitting around to where you can be like, all right, I'm okay with losing this every month, or with losing this every 2 weeks, or with losing this every quarter, don't trade with that money. If you're okay with losing it, then you can go ahead and put that into an investment, into a trading account. You can go put that into someone else's business. You see what I'm saying? So that's the first rule. Don't trade money you're not willing to accept the loss on, and it won't hurt you financially, okay? That's the very first step. So that's the first way you manage your risk, right? Trade with only money you're willing to lose. Once you put it like this, once the money is out of your bank account, it's out of your pocket, it's not yours anymore, right? Just keep it that simple. We'll keep it that simple, right? Second part to your risk management in terms of trading, Forex, options, stocks. Now you have stop losses, you have stop losses, and stop losses are, I'm willing to take this L. I'm willing to take this loss, right? I'm willing to lose $200 if this trade goes in the opposite direction that I intended to. I'm willing to take that L, right? That's your second right? That's fixed. Both of these are fixed. Fixed risk management, base risk management. So say my fixed account, right? Number one, fixed. My account is $1,000, right? And on a percentage base, that means I'm going to choose a percentage either per day or per trade that I'm willing to lose on my account. Okay. And what that looks like is I have $1,000 and I'm gonna risk 2% of my trade, 2% of that account per trade or per day. You choose. That's up to you. And 2% of $1,000 is $20. That's pretty reasonable, right? So, how does this work? Well, you want to take your trade. You want to set up your trade, and you're going to put in. And this is what I like about trading view. A lot of people don't know. Let me see if the market is closed, but let me see if it still show you. Pick the trade real quick. No. Hurry up. Let me see if it show you. All right, so the market is closed, so I won't be able to show you right now. But you can put in an order, and you have your account balance. It automatically recognizes your account balance once you connect your broker. You put in your order, and you can say, I only want to risk 2% of my account, and it's going to auto-populate your stop loss and everything like that, or it's going to auto-populate your trade for you based on your stop loss and everything. So it's going to tell you, it's going to give you the exact amount of units you need to trade to make this happen, right? That's with trading view. You can do that. You have the option. With the manual option is you have to really dig down into the math. You have to know where you're going to enter the trade. You have to know how many pips your stop loss is going to be to get the exact number or get a roundabout number of 20%. $20 of your trade, $20, not 20%, but 2% of that $1,000, right? That's more stuff. We'll get into that more later. But that's the percentage. So 2%, I'm risking 2% to make 100, 200, 300, hell, $50. 2%. A 1-to-1 is 2%. So at minimum, your profit would be $20. $20 loss for a $20 win. $20 loss for a $40 win. It's 1 to 2. $20 loss for a $60 win. It's 1 to 3. And that's where the risk to reward come in at. Risk to reward ratio. So I'm going to risk 1 for 2, 1 for 3, 1 for 5, and so on like that. 1 to 1, right? So one $20 loss for a gain of two $20 wins, which is $40, right? That's risk to reward. You set it up like that. And that's the nuts and bolts. Let me get into these, show you what happened with some of these trades though. Shoot, how long it's been? It ain't been that long. All right, go back. All right, so the first trade, like I said, right here, right? Boom. Came all the way down. We got in. We got stopped out here. Risk to reward was pretty dope. I had almost no drawdown, literally, because my stop loss was up here. Original stop loss was up here. A second entry, I waited. I got in here. Stop loss was a little bit up here. Almost no drawdown. Same like the first trade. We pushed all the way down. Once we hit that 1-to-1, I partied out 90%. Trade came back. I got stopped out, right? Then waited. All right. Then the next trade I got in, again, down here. It's even smaller. It was more risky because I saw what the trend line here. That was a more risky trade. But as you can see, I still was able to win the trade and partial out. This one was a literally 1-to-1 move, and pretty much soon as I partialed out, I got stopped out anyway, right? And then I waited the price to structure up again and did the same thing again. Right here, got in, stop loss up here. We did like a 1-to-1, partialed out, move my stop loss below break even. Got stopped out with the money. I was waiting for more setups, but I decided to take the rest of the week off and just chill out. Because literally that last trade I got stopped out on, the market stopped me out and it left without me. But it's still in that range. So I know for the next best entry for me, I still have an opportunity for it. And it's not probably, it's on 2 scenarios for me. Wait for price to either hold here, continue to structure up here, or give me a higher entry around here somewhere before taking a sell, or to have a clean break and close below this area here on New Zealand dollar, Japanese yen. And I'm going to apply my same money management, risk management tools that I've been applying, right? Risk a percentage of my account. I'm trading pretty heavy on the risky side. I'm trading 20 to 30% risk, partial out 90% once I hit 1-to-1. But then move my stop loss below break even. So now I'm in a risk-free trade, right? Risk-free. In the beginning, your trades won't be risk-free, not until you break into profit. And then you can use tools, money management tools and numbers to lock in that profit. And that's what I like. You know what I'm saying? So, but that's it for today. Short recap, right? Money management, risk management. Determine how much you're willing to lose first. It doesn't matter. Determine how much you're willing to lose first. Then you can take as much profits off the table, as much profits you want to hold, as much as you want. As long as you take some profits, all right? So that's risk management, money's management. Do me a favor. If you like the content, if you'd like to see more content, hit that subscribe button, like, share, thumbs up, thumbs down, comment, and get at your boy. All right?